Hey, what's up guys? John here. Bank lending is going under immense pressure, to say the least. Credit card defaults are now hitting the highest point in 30 years with the exception of the Great Financial Crisis. But yet this is only just the beginning because there are three major black swans that are about to hit this economy. The first is that student loans are going to be due in 9 days for 44 million borrowers. This is 18% of the general public over 18 years old. 44 million borrowers. $504 a month. This is a big problem considering the average consumer has less than $400 in the bank. And so as this begins to happen, what are we going to start to see happen? We're going to start seeing consumers ask themselves, who am I going to pay? Because I don't have the money. Am I going to pay the landlord? Am I going to pay a credit card? Am I going to pay the auto note? Are they going to pay, what are they going to pay? The student loans? They're going to start making decisions. And so as this is happening during the holiday season, when people historically travel, they buy gifts for loved ones and family members, they're accumulating more and more debt. So what I think is ultimately going to happen is this trend that they're showing us is only the beginning, and we can kind of get a clear indication of what 2024 and 2025 is going to look like, so you can make smart, forward-thinking decisions, so you can invest and pick up incredibly distressed real estate deals and great opportunities. I think we're going to see a lot of business consolidation, a lot of businesses closing, and a lot of opportunity to buy some of these mom and pop businesses. So if you are thinking of, making some really big moves, I'm going to break down exactly how to do it in this video. Please hit the like button. YouTube will share the content, educate other people about what's really going on. And if you want to fix your credit, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, repossessions, bankruptcies, you have any problem on your credit report, do not let it sit there. Do not let it sit there. Because when this economy starts to turn and banks tighten up lending, the first people to lose access to money are people with bad and average credit. So don't let that happen to you. Go to GreatCreditFast.com, book a free strategy session. Take a look at this. So this credit card company is racking up losses, fastest pace in almost 30 years outside of the GCF, right? They say losses currently stand at 3.63%, up 1.5 percentage points from the bottom, and Goldman sees them rising another 1.3% to 4.93%. This comes at a time when Americans owe more than $1 trillion in credit cards at a record high. Now, I think that's extremely conservative because of a couple variables. One is not just the student loans. It's this corporate debt wall situation. There's $2 trillion worth of loans that companies are holding right now that have to get refinanced next year. $2 trillion. Many of these loans are picked up at 0% interest rates or very close to it. Basically free money, environment money. They had access to all this capital. They invested in their people, their companies, expansion. Now they have to refinance and go from, that interest rate to today's interest rate, which is going to be a big problem for many of these companies. So you're going to start seeing companies issuing layoffs. They're going to start closing down, certain locations. They're going to start cost cutting, right? And so as they cost cut and you have $2 trillion worth of, loans that have to get refied, what's ultimately going to happen? These numbers are going to continue increasing because as employees lose jobs, they'll lose access to money, right? And as they lose access to money, people don't get paid back, right? So we're going to start seeing this continue to increase. And this also happens at the same time that in 2024, $1 trillion in commercial loans has to get refinanced as well. $1 trillion. So a lot of banks are going to start losing money on a lot of those loans as well. So banks are going to be losing money on their books. They're going to be losing money on their balance sheet, and they're going to be losing money due to consumers having less of it and inflation likely being much more persistent and higher for longer. We think delinquencies could continue to underperform seasonally through the middle of next year. We don't see losses peaking until 2024, early 2025 for most issuers. Well, Jerome Powell said Federal Reserve, obviously everyone knows that he kept interest rates unchanged at the last meeting, but he signals one more hike is, likely in 2023. Here's how this works. Right now, credit card interest rates, 28.05%. This is the average. It's unbelievable to even say that number. 28.05% is the average according to Forbes Advisor weekly credit card rates. So in 2008, the Great Financial Crisis, credit card interest rates were 12%. 12%. And let me look at this. So if you owed $10,000, right, and you went back in 2008 during the Great Financial Crisis, you would pay $2,200 in interest payments. $2,200 in interest payments. It would take you 3 years and 5 months to get out of that debt, right? At 12%, if you're paying $300 a month. If you go to today's interest rate, at 28.05%, many people think, oh, it's going to be $4,000 or $5,000. No, that 28.05% interest means $10,000, right? So a 4x, basically 4x more than during the Great Financial Crisis, right? And that's if you can afford to pay $300 a month. If you're paying $250 a month, like many people probably would, try to make the minimum payments, $19,000 in interest payments on a $10,000 loan. It's unbelievable. I mean, loan sharks charge 15, 16%. Hard money lenders charge 14, 15%. Yeah, credit card companies charge nearly twice that. So if you have credit card debt, pay attention to what I'm going to share with you here, because there's options for you. So borrowers who fail to make regular monthly payment, this right here also is from stlouisfed.org. I'm pulling this down so you can see the URL. Borrowers who fail to make regular monthly payments on their credit card become delinquent, and companies routinely use credit scores to predict the borrower's likelihood or delinquency of default. Look at this from MarketWatch. So they said people with a credit score between 300 and 600 have experienced an 8.9% delinquency rate. 8.9% delinquency rate. And people with great credit, 661 to 780, have a delinquency rate of 0.01%. So if you were a bank, you were a lender, who would you want to lend money to? A group of people between, that offer a 0.1% default rate, or a group of people that offer a 8.9% delinquency rate. You'd probably want to stay clear of the 8.9% delinquency rate, right? And so what's ultimately going to happen is these credit scores are going to become more important than ever. I've actually predicted this 18 months ago. I said, I have a prediction. The prediction is inflation is going to be higher for longer. Interest rates are going to be higher for longer. Consumers are going to really get rug pulled. And we're going to be walking into an environment to likes which we have never seen before. And it's going to get harder to get a loan. And so because of that, I'm opening a company. And I went live and said this on this channel. And I hired a team of credit repair specialists in-house, and we're helping a lot of people. But I predicted that what's ultimately going to happen is we're just going to start seeing more and more and more defaults. I was early on that prediction. Defaults are now happening, and they're happening more and more every single month. But I think 2024 and 2025, it's going to be absolutely crazy. It's going to be absolutely crazy what is happening with defaults. So, and because of that, bank lending is just going to tighten up dramatically. If we look at a couple things that are happening right now. You have large commercial investors right now. They said that they own 5% of all single-family homes, 5%, and they will own 40% of all homes in America by 2030. So they're going to essentially increase their market share by 800% inside of the next 6 years. So when you start to look at this and you're like, okay, well, how are they going to do this? Middle class is going to get rug pulled. They're going to have a harder time getting a loan. A lot of these deep pocket investors are going to run out there and pick up a lot of property. A lot of small businesses are going to get greatly restricted when it comes to obtaining financing. Consumers are going to have less money. So what are they going to do? They're going to spend more money online, Walmart, on Target, Amazon, getting deliveries, right? They're going to try to cut back on gas consumption. They're going to start doing whatever they have to do to try to make it, right? And so you want to put yourself in a position to where if you're looking at the writing on the wall, which is likely going to be tighter credit conditions, you're putting yourself in a position to where you can A, get a loan, and B, you know how you're going to make money and you know what your plan is going to be. If you do that, you're going to be in much better off. In 2020 and 2021, a lot of people invested in crypto and NFTs and stocks. Some people made a lot of money and they cashed out at the top and they didn't enter back into the market. But many, I'd bet probably 9 out of 10 people made a lot of money. They took that money, profited for a little bit, then they took profits, and then they went and reinvested and lost everything, right? So during that era, a lot of people made a lot of money, but a lot of people lost a lot of money. They went from being in the middle class to felt like they were in the upper class, then back in the middle class. But what I think is going to happen during this recession is we're going to see a lot of people in the middle class that are going to essentially turn into, someone like from the movie Spartan, where they're just going to be fierce and aggressive, and they're just going to do whatever they can possibly do to climb to the top, right? That's what I think is going to happen. But put yourself in a position to where you can make that possible. Here's a really interesting article that I read about a lady who is wanting to do a kitchen remodel, right? And so she applied for all these different loans, and she said that she was literally in tears. She said she was in tears trying to get, right here, that she was in tears after spending hours on the phone. She said she was dumbfounded by how hard it was. They requested 20 documents, and it was just an absolute nightmare to get a loan against her property. So you think about this. She's getting a loan against a collateralized asset. She's putting up her property to get this loan. And she said it was an absolute nightmare to do this kitchen remodel, to take the money to invest it into an asset that already has the equity in it to justify the loan. She still said it was an absolute nightmare. And the reason for this is because banks they're seeing the writing on the wall, right? They say, according to the Federal Reserve Bank of New York's June survey, consumer expectations, the overall rejection rate for credit applications increased nearly 22%, the highest level since 2018. Rejections jumped across the board, rising 14% for auto loans, 13% for mortgages, and nearly 31% for credit card increases, right? Well, Here's what I would do. Here's what I would do if you have credit card debt. There are many of these credit card companies, and I'm going to tell you what their plan is because they want to trap you. So many of these credit card companies, like this right here, they will say 0% for 21 months. And many people will say, hey, free money. And they'll spend, and then they'll say, okay, at month 17, I'm going to get on a pay down schedule. I'm going to pay everything off. And then at the end, I'll be debt free and I won't pay any interest. 9 times out of 10, that never happens. What actually happens is they'll spend, they'll max out the card, and then they'll say, I'm going to pay this down. They're unable to pay it down. Then they're essentially a financial slave to this credit card where they're trying to pay it off. And then the credit card company got you, right? That's what they're banking on. What I would suggest doing is if you have credit card debt and you are paying an insane rate like 28%, if you owe $10,000, I would, this is me, right? I would apply for one of these cards if I thought I was very likely going to get approved because they have minimum credit scores here, 670 to 850. So I wouldn't apply if I had a 700 credit score. I'd want to be like 750, 780. Because if you apply and you get rejected, they put this as a minimum. But if you apply and get rejected, or if you apply and only get a $500 or a $1,000 line of credit, what difference does that make, right? You want to have a really good line of credit, 10K, 20K. At least I would. I'd want to have 10, 20K worth of a line of credit, and then I'd want to reduce my expenses dramatically. Maybe I'd even bring in a roommate. Maybe I would downgrade my car. I would do whatever I have to do. If I did not have the ability to make a lot of money in the short term, I would just downgrade expenses dramatically, and I would pay every single thing, every dollar I made, I would dump into paying off that debt after doing a 0% APR balance transfer. Then I would set a goal of trying to pay it off inside 10 months. Right? And then that would give me more than enough leeway. And then I would potentially just continue to keep the card and spend a couple $100 a month or $100 a month on it just to keep the relationship with this financial institution. But I would definitely not put myself against the wall with a huge balance at the end of this, unable to pay. And that's what many people do, and that's what how these credit card companies, why they make these offers, because they want to trap people. So be cautious of this. But there's many of these credit card companies that'll do 18 months, 15 months. But there's a lot also that will do 21 months and 24 months. If you just do your research, a lot of these companies are offering these. So be careful with the cards in which you choose. Make really smart decisions with consumer debt. And you think about it this way. If you have an environment like we've had the last couple of years where everyone was buying, investing, if we walk into a situation where there's a credit crunch and people don't have access to money and they need access to money to survive and all they have are assets, what are they going to do? They're going to look to the open market and see, okay, who are the available buyers? If there's less liquidity available and less buyers available, and there's more sellers looking for money, what's ultimately going to happen? Supply and demand. We're going to see prices continue to fall. So put yourself in a position to capitalize on these prices, put yourself in a position to be able to get funding and financing, and put yourself in a position to advance because we are witnessing the rug pull of the American middle class. If you need help fixing your credit, we'd love to help you at my company, GreatCreditFast.com. You can click the link below, schedule a free call, drop your comments in the comment section, and I'll swing by and drop some comments as well, or responses back to you. And feel free to add me on IG, and I'll catch you guys in the next video.